Welcome to the Polaris February video newsletter. I want to stress two major themes for this month. Number one is in equities. We've had a very strong January. 63% of companies beat their earnings expectations. We've had some positive economic news on the unemployment front. All of that's been very, very positive. So going forward, we're relatively optimistic. Also of note is that a lot of those earnings were led by financials and technology. Those are two sectors that we have been watching for the past several quarters. They lagged in the second and third quarter of last year, third and fourth quarter of last year, but they're continuing to outperform into this year. So we're very optimistic about what that means for the overall economy, typically because financials lead as the economy begins to improve. So as financials are beginning to lead here, finally, as we've been waiting for, we're looking now to see what small and mid-cap stocks are going to start doing. So we're not looking for additional investment, most likely into financials, unless there's a pullback, but we are looking to see what small and mid-cap stocks are going to do going forward, because that's going to be our next opportunity for investment as we see the economy start to improve, or hopefully as we see the economy start to improve. So that's number one. Number two involves interest rates. We continue to be bearish on the 10 and 20-year treasuries, and the reason is this. While Bernanke did testify to Congress that he does want to keep his short-term interest rates at 0% through 2014, there are factors out of his control that could cause those interest rates to go up. One would be a positive stimulus. The economy continues to improve. There's inflation fears, and therefore interest rates start to go up. The other would be a negative stimulus. If the U.S. continues to spend and our debt relative to our GDP continues to go up, then we're going to be perceived as risky, the same thing that's going on in Europe right now. And in that case, of course, interest rates would go up as well. So by and large, we're bearish on U.S. Treasuries, and we've been shorting U.S. Treasuries, the 10 and 20-year U.S. Treasury, and that's a theme that we're going to see continuing into February, March, probably throughout the first quarter. So those are the two major themes that we're looking at in each of the portfolios, and we certainly welcome any of your questions. Please give us a call with any questions that you might have in general about the market or about your portfolio in particular. Look forward to hearing from you, and we'll see you again soon. Bye-bye.